Hi and welcome everyone. In today's video, we're going to break down the real difference between trading and investing, two terms that often get used interchangeably, but in reality, they're worlds apart. If you've ever seen headlines like, "Trader makes $10,000 in one day," or "Investor turns $1,000 into $1 million," you might be wondering, what's the real difference, and which path is right for you? Well, stick around, because we're going deep. These days, most trading happens online. You can open an account, click a few buttons, and suddenly you're buying and selling stocks from the comfort of your own home. Technology has opened the door for everyday individuals to try their hand at trading. And yes, some people do make money from it. But here's the thing. Just because trading involves buying and selling stocks, it doesn't mean it's the same as investing. In fact, the mindset, strategy, and even the risks are completely different. Being a trader, whether as a profession or a side hustle, is not the same as being an investor. And while trading can be exciting, the reality is that for most people, it's not the smartest long-term move. Let's start simple. Investing is the act of putting your money into something with the goal of making more money over time. Think of it like planting a tree. You nurture it, you give it time, and years later, it gives you fruit. Trading, on the other hand, is the act of buying and selling investments, often very quickly, to make money from short-term price movements. This is more like picking wild berries, quick, fast, and sometimes unpredictable. Now, there's no official rulebook that says, this is trading and this is investing. But generally, the difference comes down to your time horizon and your approach. Investors focus on the long game, allowing their assets to grow gradually over years. Traders are playing in the short game, looking to take advantage of volatility, those ups and downs in price that happen daily, even hourly. So what's the key differences? Timing of trades. Investors buy a stock and plan to hold it for years, maybe decades. They don't panic if the price drops today because they believe in the company's long-term potential. For example, if you invested in Apple back in the early 2000s and held it, you'd have seen massive growth over time despite many dips along the way. So what about traders? They are a completely different mindset. Day traders might buy a stock at morning and sell it before lunch. Swing traders might hold for a week or a month. The focus isn't on where the company will be in 10 years, it's on where the price will be in 10 minutes, 10 hours, or 10 days. Analysis of stocks. Investors often look at a company's intrinsic value. They study its earnings, its growth potential, its market position. Basically, is this a great company to own long-term? If the stock's price is lower than they think it's worth, they might buy more. Traders, however, often don't care what the company does. They look at charts, patterns, and technical indicators. They might see that a stock tends to bounce every time it hits a certain price, and they'll buy, not because they love the business, but because they think they can make a quick profit when it bounces again. Mindset and risks. Trading can be thrilling. You're competing against other traders, institutions, and even algorithms that react in milliseconds. Some traders compare it to playing poker. You have to read the table, bluff when needed, and take calculated risks. But here's the danger. Trading can also be like gambling. Many traders use leverage, basically borrowing money to make bigger trades. Which means both your profits and your losses can be huge. You can make a lot in a single day, and you can lose a lot just as fast. Amateur traders face some steep challenges. You're up against professionals who have better tools, faster data, and years of experience. And even if you have skill, luck plays a big role. One bad trade can wipe out weeks of gains. Conclusion. So, which is better, trading or investing? For most people, the answer is investing. Long-term investing with careful research, patience, and discipline gives you a much better chance of growing your wealth. It lets you take advantage of the market's overall upward trend without getting caught in the stress and risk of constant buying and selling. Sure, you might miss the adrenaline rush of a big trade, but you'll also avoid the heartache of watching your account drop overnight. Think of investing as building a steady, reliable engine for your wealth, one that keeps running for years, while trading is more like drag racing, high risk, high speed, and not for everyone. If you like our video, do subscribe, click like, share as the motivation for us to produce more videos.